the next group of adjustments, interest on capital and interest on drawings. Well, first we'll understand the concept of interest on capital and interest on drawings. Well, to start the business, the owner introduces the capital. Capital is treated as the liability of the firm. When the business closes, the firm has to return that amount to the owner, so capital is treated as a liability of the firm. Well, capital is the amount which is introduced by the owner and it is given to the business. So, in return, the firm has to pay interest on this capital, which is termed as interest on capital. Well, it is expense from the viewpoint of firm and income for the owner. Similarly, students, the owner withdraws cash, goods or assets for his personal use from the business. Well, these are termed as drawings. Now, the firm will charge interest on these drawings, which is termed as interest on drawings. So, in a way, interest on drawings is the income of the firm and it is the expense of the owner. Well, the most important thing, students, interest on capital and interest on drawings, these transactions are never done in cash. They are book adjustments. That means these transactions, interest on capital and interest on drawings, are always adjusted in books of accounts at the end of the year. Well, we'll take a trial balance as on 31st March 20. Capital given in trial balance on credit side 1 lakh, drawings on debit side 10,000. Well, adjustments says that provide 10% per annum interest on capital and charge 5% per annum interest on drawings. Well, we'll understand the effects of these adjustments. We'll take profit and loss account and balance sheet. First of all, we'll do the posting of this trial balance items. Capital given in trial balance will post in balance sheet liability side capital. Below that, opening capital 1 lakh, inner column will write. The next item, drawings given in trial balance, will show as a deduction from opening capital, that is capital less drawings, inner column 10,000. Now if we take the first adjustment, provide 10% per annum interest on capital. Well, let us calculate the amount of interest on capital. 10% of capital, that is 1 lakh. So interest on capital comes to 10,000. The first effect, it is the expense of the firm. So we'll show in profit and loss account debit side to interest on capital 10,000. And the second effect, it is the income of the owner. So in capital, liability side will add plus 10,000 interest on capital. So two effects of interest on capital is, will show as an expense in P&L account and will add with capital. Well, the next adjustment, charge 5% per annum interest on drawings. So let us calculate interest on drawings. Interest on drawings is calculated on drawings. So 5% of 10,000, that comes to 500 rupees. Now first effect, it is the income of the firm. So in profit and loss account, credit side will write by interest on drawings 500. And second effect will show as a deduction from capital minus interest on drawings 500. Yeah, you can add with drawings also. So two effects of interest on drawings will be profit and loss account credit side And second effect is directly we deduct from capital. Yeah, we'll add with drawings and then total drawings we deduct from capital. So these were interest on capital and interest on drawings.